it's actually, it's not limited to financial planning, because planning has to be integrated. And we'll cover that as we go along. What we're going to do is cover the crisis experience that I have had. I've lived in crisis countries like Zimbabwe, Zambia, I've looked at Argentina, then the Dubai in the earlier days, and then Indonesian crisis. So I've had that crisis experience. I'll share some experience from there. The position of the banking industries, the issues faced by Indian banks, what the MNC banks are doing. I've got some corporate case studies at the end, and as to what they did when things went wrong. So what happens at the time of the onset of the crisis? First thing is, there have been very few experts who have predicted crisis. Paul Samuelson says that America has predicted 9 out of the 5 crises. So the Asian crisis was not predicted. Of course, there are people who claim later on that they have predicted it, but I was there, I know. It was all of a sudden. Then herd mentality, everybody goes in one direction. And when the crisis hits, everybody waits and sees what happens. Yeah? Tipping point. Tipping point means, you see, when I was in Indonesia, the rupiah, there the currency is rupiah, and it was 2,000. It went to 2,200, 2,400, 2,600, 2,900 and 17,000. It lost 97% of its value. So the tipping point is 2,300, 2,400. That's where there's a directional move, and that's where you need to take some action. So what happens is, generally there's a sense of denial, and later on, 6-9 months later, there's a sense of helplessness. So there's a damage control opportunity. What we have found is, those companies which have taken action within the first 90-120 days have survived. What did they do? I'll tell you later on. A regional recoil, don't look at only, for example, Ireland or Greece affected Europe. Thailand affected Asian crisis, all the countries in Asia. So if something happens somewhere else, don't just ignore it, that this is happening in Thailand or the USA or whatever. Southeast Asia, they survived the Asian crisis. They were bitten by the Asian crisis, so they were a bit wise when 2009, 2010 came, 2011, but 2012 they are not yet that prepared. Plan B is what companies should have, and they do have a 10%, 15% stress test scenario, but nobody has a 40%, 50% downturn scenario. And that good companies I have found, so I have worked in about 6 or 7 countries and 4 continents. What they have is, they have a standby plan when there's a crash, there's a real crash. Now that's something I've learned from some of these companies. I'll tell you, for example, Cargill is a commodity player, but 60% of revenue came from buying and selling bad debts. That's the standby plan, right? This was in that country where I was working. We are more interconnected than we think. Yeah, too big to fail is out. We have seen General Motors company doesn't exist. For those of you who are tuned to the auto industry, General Motors Corporation died. What we have today is General Motors company, a carved out portion of the old General Motors. Marconi, we have seen so many other companies. Appetite, yeah, generic MI signals are not picked up. Then we had these fancy financial instruments, subprime, CDOs, etc. Risk culture, this is usually something which is relegated to the back office. That's companies which have survived, where risk or cost or innovation or whatever is built into the DNA of the company. Now, this is something that we need to know. Once the crisis hits, then there's the blame game going. You're responsible, you're responsible, I'm not, you forgot to do this, I forgot to do that, all that stuff. And good companies, before other banks start cutting line, they start a new banking relationship. Event risks and now you have these, Iceland ash, or you have the tsunami or whatever, right? So you have to have a clear risk appetite statement, healthy and open discussion. It should be a one-down, top-down kind of thing with incentives in line. Now, the corporate amnesia sets in when big profits and bonuses are. Again, I won't cover this in detail. You Eurozone issues, Japan's debt trap, 179% of GDP, US almost 99% of GDP. But there are two things I've highlighted in red when I saw the conference agenda that people would have spoken on the economic situation is 29 systemically impacting financial institutions. Now, Dexia Bank, Bank of China Banking Corporation, like that, there are some, one Chinese bank for 3 Japanese banks, 8 US banks, and the rest are European banks. Any one of them affects the group, the whole world gets affected. Because it's a systemic impact, right? The companies pull out, and then the chain gets affected, the supply chain gets affected. So that's one thing. And financial alchemy, companies trying to get out of banking regulations. 2 investment banks have been warned by the regulator in US that don't play around with figures, right? India growth story, we have some euro investments, right? And that is a question which might be subject to some dip. And we are not decoupled with the rest of the world. There was the decoupling theory which was convenient and floated in 2007, 2008, but we are not. Now, I will skip this one. Yeah. Banking crisis, there have been many, but they gone unnoticed, right? So if you look at them, there are quite a number of banking crises in the past. Now, I was in Indonesia where 139...